Barbara Moody, and I'm your Fort Bend real estate expert. We have today with us Tara Whitting, and she is with Gibraltar Mortgage. We are going to discuss reverse mortgages. It's a complicated type of mortgage, and so I wanted to get an expert, someone who's dealt with them several times in her past, to tell us all about it.
Thank you very much. And I actually started a reverse mortgage division a number of years ago. I find that a lot of people don't do reverse mortgages or take advantage of them, which could be really beneficial to them, simply because they don't have enough information about it. And I think that also it had been mismarketed maybe a number of years ago, but it is a fantastic tool for a number of seniors. It's just more understanding how the product works, getting more information, and seeing what it would mean for them, how they would qualify, or if it would really be a fit.
I've got someone right now I'm thinking of to introduce you to because I think it would be a great fit.
I think that what a senior could benefit from with a reverse mortgage is that they may have a lot of equity in their home. They may have a lot of equity that they could put toward the purchase of another home, but maybe they are on a fixed income, and so this would alleviate their burden of having to make the monthly principal and interest portion of the payment. So they still do have to maintain their taxes and insurance, but that would otherwise perhaps give them some extra monthly expenditures instead of having to make that mortgage payment. The way that the product works is it's based on the age of the senior. So there are very similar to life insurance tables. They're set on what their age is. So the senior needs to be at least 62 years old. They have to occupy the property as their primary residence. And then based on whatever the purchase price of the house is, or if they own their home free and clear, or even if they own their home that had an existing mortgage, they could go get into a reverse mortgage as well, and then again alleviate those mortgage payments.
It sounds incredible.
It really is a really good solution for a lot of seniors. Oftentimes I'll get the question too from clients. They'll say, well, then what's going to happen? The bank's going to take the house after the senior either moves out or goes into some type of facility or they pass away. That's what I thought. Yeah. It's a very common mistruth, if you will. Essentially what happens is it's just like a mortgage like any other. So if a family member wanted to refinance it and move into the house, they could do that. If they wanted to pay off the mortgage and turn it into an investment property, or simply if they just wanted to put it on the market, then they sell it, they pay it off just like any other regular mortgage.
So if they were going to do it now, say the home was paid off, they would be at today's interest rates, right?
That's right.
Okay.
So, and there is mortgage insurance on this as well. So it's it's actually much like FHA, it's a very stable loan. I always like to kind of explain how this came about. Seniors have statistically got the most equity in homes in the United States. So they may own their house, they may only owe a little bit, but they, again, don't have a lot of monthly income to do with what they maybe want to do. So they could take out this reverse mortgage. Let's say, for example, their house was free and clear. Let's say their house is worth $300,000. They could, based on what their age is, we've got a calculator, then they could take out, for example, let's call it a $150,000 reverse mortgage. They can set it up as an annuity. So it's basically paying them what ordinarily would otherwise be their mortgage payment. Otherwise, they could take a lump sum. There's no requirements on what they do with it. Maybe they wanted to do home improvements. Maybe they needed to update. Maybe they wanted to go on vacation. They could do with what they want. So they could take them as a lump sum minus their closing costs, which is also nice because you can finance those. And or you could do a partial lump sum and then set it up as essentially an annuity payment, right? So hence the idea and concept of reverse mortgage came from.
And then the heirs, what is their responsibility?
So once either one or two or the senior is no longer living or occupying the property as their primary residence, the reverse mortgage needs to be satisfied. So that can be done again in terms of selling it, or they could refinance and keep the property. So it just acts like any other loan.
All right. Okay. So many of these things, really, 18 years in the business, and I did not know a lot of these details that Tara's describing to us. So is there anything else that you wanted to add as far as the details regarding the reverse mortgage?
I don't think so, other than just it traditionally was just a refinance, and now we've had for a number of years to do a reverse mortgage as a purchase.
If you'd like more information about this, I can send you some flyers with a lot of the things that Tara discussed. I can send these to you by email or regular mail. Just drop me a note, send me your information, and thank you for joining us.
Thanks for having me.